Alrighty, people, we're back at it. The third video of the day. I'm excited. There's a lot of stuff going on in the market, and this one I'm going to talk about wheat stocks primarily, but it's also related to value stocks, believe it or not. And I want to show you guys a cool little trick or secret. Not really, honestly. It's just the inverse correlation. That's what it comes down to. So sorry for the clickbait title, but a lot of people are unaware of this. And, you know, I saw that today when some of the wheat stocks went down. There's a lot of cool points to note from it. And, you know, the market was interesting. And lastly, I'm going to talk about, and also I'm going to be talking about some of the stocks I'm going to be looking at tomorrow morning and that we're going to be trading at open or going to be keeping my eye on. And, you know, things change. From the video I made yesterday, I played some of them and they ended up being wrong. And, you know, then there was a hit on Facebook as well as Wayfair. So those were stuff I talked about, but I want to go over all those. If you guys haven't done so, just click in the description below for the live streaming channel. Make sure you guys are subscribed. We're going to be on around 6 a.m. or 30 minutes prior to market open, and we go till about 11 or power hour, sometimes close. It really depends what's happening with the market and how active everybody is. So without further ado, this is what I want to talk about. You know, wheat stocks went down today, and a lot of people really initially what happened, the market gapped up. As you see, I have it overlaid with the SPY, but then wheat stocks went down on it. And, you know, the market opened up, the wheat stocks started plummeting, and really the market started going up, and then you get kind of caught with it. But essentially, people are like, oh, wheat stocks are getting killed. And I noticed this a lot, and if you've watched the stream, you've seen me call this out, but it's really specific with the stream because you start to see everyone's like, oh, weed's down, weed's getting killed, and it always parallels when the market's ripping and vice versa. And what I've noticed over the last few weeks is that there is an inverse correlation, and really the weed stocks are acting like value stocks. I know it sounds so weird to say. It kills me to say that. But, you know, the key here with all of it is there's an inverse correlation where essentially if the market's going down, wheat stocks go up. And it makes sense, you know, it doesn't make sense, but you could justify it from a rotational, you know, objective by saying, yeah, people are rotating out of, you know, the market's shaky. They rotate out of the wheat stocks and they go back into the market when the market's good, and when the market's bad, they put it into something like the wheat stocks, which aren't really too dependent upon the economy, anything like that, and it's just something you'd want to hold. So you kind of see it here, you know, and this is the key, just like any value stock, because if I show you what I'm going to show you now, the value stocks did the same thing today. Starbucks, Walmart, McDonald's, Procter & Gamble, they all went down, you know, and at one point they did the same thing, literally right at open, they gapped down, kind of caught with the market starts coming down, they go up, but then once the weakness sets in and it's clear everything's selling off, everything sells off. So that's where this doesn't apply. That's why when I'm saying this and I'm looking at like Cron, you're like, what are you saying? But I want you to notice when the market's up, it drops down and you start to see market is down, it's down with it. It goes up a little bit, but now market comes down. Again, market tests a new low. The wheat stocks don't test a new low. They actually start going up. And then it starts to go up, the market, the wheat stocks stay the same, and then it starts to come down, they go up, but then they catch with each other, and then they start to go down because the market's generally selling off. However, if you look at Aurora shows exactly what I'm talking about, where it gapped down, sold off, same thing, new low on the SPY for the first time. It starts going up with the SPY. SPY hits a new low, but now it's kind of hitting high. It gives up a little bit. It starts reaching with the market, but eventually as the market's coming down, it did its own thing and you know, it looked like you got a rotation effect in there. But now let's look at CGC, and it looks like the other ones. But again, you could start to see that, and it's the same thing like I said with the value stock. So this was that little trick I wanted to share you guys. You know, don't use this like technicals. Don't use this where, okay, every time this, every time that. No, it's not conditional like that. You know, that's logic, right? It doesn't work like that. It's just saying sometimes this occurs, or maybe a good majority. However, there's different indicators, and that's the play I made today. You know, I made 2 plays today. I traded Facebook. Let me just show you guys here. I did Facebook, and in the reasoning why I'm going to share on the next one, but the same logic I had for Facebook was the same logic I had for Baidu. However, both went down, and you know that logic is pretty much compare them to the S&P. You know, here's Baidu compared to S&P, or if I even put up, you know, I was comparing it to like Alibaba and JD. Look at all the other Asian stocks. There was good news in China. Shanghai Composite ripped. this would have been this was your lagger. That's it. It's essentially saying this is going to be the one, even if there's a gap up, there's going to be more room for you to gain. But now look at, that's what happened with Facebook. Out of all the tech stocks, you know, let's see where Amazon is. Well, that doesn't look good because the gap up, but realistically, what I'm saying is here in these days, it went down while stuff like Amazon stayed up. If you look at Google didn't really hang down too much, but Facebook was kind of getting more of a downtrend. That's why this morning it was pretty easy to grab. I wouldn't say easy, but same logic, and then that ended up being a good play. So hopefully that helps you guys. Be careful with the weed stocks. My favorites are CGC, Cron, and Tilray. Cron a little less, but I'm not a fan of Aurora. I'm sorry, you guys, and not just because how many shares and the fundamental aspect. Go check out my video on filings, and maybe that'll make a little bit more sense. But now let's get into the plays. What I'm looking for is Facebook again, because now Facebook, if the market does go up, it could also be a lagger, but then it had some of that weakness. It went up today. It closed pretty decent. Even after the close, it still held relatively higher percentage, but the key is the same logic. I'm looking at Facebook I want, but now the next level on the next, did I have another play on there? No. Okay, yeah, Facebook, it's the same logic I just explained and coming in from yesterday, but they have either both negative news from kind of that New York lawsuit that came out, or some of they're working on the fine, but then also compared to some of these stocks, it had the run up, it came down, but the options, the calls were expensive today. The puts kind of stayed the same. They went down a little, but I'm going to be watching Facebook, or even switching maybe to Amazon. I got a play on Amazon today. Again, Amazon actually, and I think that's a good one on the options. If you look at the weekly options and even a month out, they're fairly cheaper. And this is both good and bad. You know, when you see a cheap option, it could mean a few things. One, the market is just underpricing something. It hasn't, and again, it makes sense. Look at Amazon. If you go and calculated the averages day by day and how much it moved over the last 3 months or 2 months, full 2 months, it's not factoring in big moves. So the option chain prices are coming down. So this is an option pricing tip for those of you who watched all this. So that's something to look at. And I'm excited to see if it makes a move either way. And you know, go watch the other videos talking about where the market's at. There's that. The next plays I'm looking at are NetEase and Kraft Heinz. NetEase is a China play. I don't like NetEase for the fact that the option chain, huge spreads, but again, it's kind of like a Baidu, but instead of Baidu trading at like lows, it's still coming low, but it's not as bad. But NetEase is pretty good. I actually like them a decent amount. However, if China goes down, it's really linked to China and I already have the Baidu. The next one is Kraft Heinz. I've been saying this. I'm going to keep saying it because you saw what Stamps did, and this is the same logic of it. And again, hopefully you guys are seeing that there's it's happening. It's the same events, but one time it works, one time it doesn't. And that's how the market works. There's different interpretations. You could get the same reasoning, the same underlying logic, and that is a huge slash in valuations, an overreaction by the market, or pretty much a first reaction, and then what happens next is the follow-up. So Stamps went down, it ripped up, but I was expecting the same thing with Kraft, and usually I say after a day like these, you want to wait anywhere from 1 to 5 days just to see how it plays out, because the volatility still has to come down, and you have to let the stock, again, if factoring this on the Black-Scholes model, statistically how the options are priced, this big move is throwing off the IV. It's going to make the prices fairly imbalanced even on both sides. So you got to be careful for that. But watching how that plays, they got, Warren Buffett said he paid too much for it today. And I think that's what kept it down. Otherwise, it probably could have had a good day. But looking at that, I think it could do what Stamps did to a degree. I'm not too concerned really I'm not concerned if Kraft goes down. I'm trying to find out when to set an entry, and this isn't day trading. This isn't trying to catch a falling knife. This is a value play. This is a stock like Kraft. I'm going to play it through options and possibly shares. I might even just sell puts on it. And if it does go down, I'm very comfortable buying some Kraft, cheaper than Warren Buffett did. So then there's the logic. If you could understand why this is something I want to target, this is underpriced. You can get it at a better price than Warren Buffett. Act now. No, but hopefully that makes sense. Next is Square. This is an important one. I was going to play it today. Sadly, I played Etsy instead, and I got puts, and I lost on that. But Square is going to be good because the earnings are, I believe, on Wednesday. So depending on what happens to the market, it's probably going to react with the market that first 15, 20 minutes. I pay attention to that. Maybe try to get a play, but watch how the IV plays out. But this is one of those pre-earnings. It could still do its run up, and it could act like those wheat stocks and kind of act independently from what it wants to do. So that's going to be important. I'd watch out for Square. And lastly, Starbucks, McDonald's, all the value stocks, because now they went down today. So they went down today. They were based off of pretty much the first reaction was the market was up. We had the gap up. Good news. Those stocks rotated out and they sold off. But now with it going down, you might see another day down, but I wouldn't be surprised to see these guys pick up simply because it's usually, it could take McDonald's, I know better. Walmart and Starbucks are random. McDonald's will probably have a day or two. It'll continue the trend and then switch up. But again, these are prone to jump. If the market starts going down tomorrow, or even if it's volatile, remember just how I made the first Starbucks play on the Robinhood account. These are the ones that could go down. They go inverse with the market, but like today, they could also follow the market. So again, it's not a sure play, but hopefully you get the idea. And lastly, actually, AMD, Micron, and NVIDIA, they had a great day today. They were interesting. NVIDIA ended up lower, but I think this could open an opportunity. You guys know I love my NVIDIA. I'm going to keep an eye on it. That's kind of at the bottom of my list, but I would pay attention for them, and if I were you guys, I would take a look at them. But that's pretty much it for the most part. If you guys have any other plays, let me know. I want your guys' take on the chip makers, and really the whole point of this video, I want you guys to be able to get ready for the stream tomorrow, have stuff. You could use this as information, really the sectors and plays. Really, if I'm giving you plays like Square, you see the earnings logic, you see the Amazon logic, look for high movers that have not moved a lot. Craft, find these stocks that have dipped after earnings or risen up, and that's how I played Wayfair. I played it today, turned 30 bucks into about was it 200 or 300? I don't know, something like that. It was a good play, and it started with the fact that it was one of it was just the opposite of Stamps and Heinz. It went up today. The market was looking weak, and it kept holding that strength. And I talked about that even in the video yesterday, and I executed on it. So you guys see, get ideas from this, and get ready to play tomorrow, or even look at it. Like I said, where the market is now, how things are developing. There's going to be good learning opportunities, good money making opportunities, but you're not going to be able to make money if you haven't learned from October, November, December. Don't forget expectations. Don't forget what happened last time, and be smart and be wise with your money. Be smart, but let's contribute. I would love to hear what you guys have to say about this. I will see you in the morning. Peace.